In our newest stocks breakdown for Shift4, we're digging into when a reversal might finally show up and why this thing deserves a spot on your primetime watch list. Welcome back to Fintech Spy, where we don't just trade the volatility, we zoom in on it, overanalyze it, draw 3 different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into Shift4. Quick reminder, I am not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Let's start with the weekly chart, our medium-term view. On the weekly chart, we're still watching Shift4 slide to the downside, like it's trying to speedrun the end-of-year tax loss meta. It's hard to tell how much of this is the stock just being meh versus the broader market locking in profits and tossing anything that isn't a mega cap into the clearance bin. Looking under the surface, though, the Stoch RSI and MACD are both starting to whisper that a reversal might be brewing in the near term. The Stoch RSI lines are closing together and drifting toward oversold, while the MACD lines are also tightening up instead of expanding lower. That combo usually means the weekly trend is getting tired. It doesn't guarantee a heroic comeback, but it does signal that the straight-down only phase might be running out of steam. Zooming into the daily chart, our short-term view. On the daily chart, the good news is that we're creeping closer to oversold again. That's trader brain code for, surely it can't go much lower, while the market quietly smiles in the background. But zooming in on the last couple of weeks, price action is starting to look less like a straight elevator down and more like it's trying to feel out a bottom. The candles are getting a bit less aggressive, the swings are tightening up, and instead of new lows every session, we're seeing more back and forth chop. It's still early, but this kind of behavior often shows up when sellers are getting exhausted and bargain hunters start tiptoeing in. Not full conviction yet, but at least a hint that the floor might be somewhere nearby instead of 5 levels down. Next up, the 4-hour chart, our intraday view. On the 4-hour chart, the intraday structure is starting to look a lot more interesting. The MACD lines are pulling closer together, hinting at that classic momentum might actually stop bullying us, moment where a trend shift often begins. If we can string together 3 to 4 solid green 4-hour candles in a row, that would be the kind of progress we haven't really seen since back around November 10th. That kind of move would say, okay, this isn't just another sad little bounce. Something actually changed under the hood. Until then, the 4-hour chart is in watch mode. The ingredients for a reversal are lining up, but the stock still has to actually do the work. Let's talk options, because nothing says emotional damage like trying to time weekly contracts on a stock in a downtrend. Looking at the January 16th options chain, the market is pricing in about a $5.28 implied move. That's enough room for some real entertainment, but not quite full meme mode. On the put side, the biggest pile of open interest is hanging out down at the $60 strike. That's the, just in case this gets uglier, crowd stacking protection near what they hope is a reasonable floor. On the calls, things tilt a bit more optimistic. The biggest chunks are sitting at 65 and 70, with roughly 1.3 thousand and 1.7 thousand contracts respectively. That's a decent chunk of traders quietly betting that Shift4 could surprise to the upside and make a run back toward those levels. Taken together, the chain looks like a market that's hedged for downside, but definitely eyeing a potential rebound. Not all in bullish, but not riding the ticker off as dead either. So what's the outlook from here for Shift4? For Shift4 traders, this setup feels like watching a slow-motion slide and trying to guess the exact frame where the reversal shows up. The weekly trend is still down, the daily looks like it's trying to carve out a bottom, and the 4-hour is quietly lining up the ingredients for a bounce, but nothing is confirmed until price actually proves it. Big picture, Shift4 doesn't look like a total collapse so much as a stock going through an extended character development arc, sliding lower while momentum indicators start hinting that the sell-off may be getting tired. Whether this turns into a real trend change or just another fake-out pop depends on how the next few candles play out and whether buyers are ready to show up in size. If you agree, disagree, or think Shift4 is just winding up for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If you think this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below. Coffee, memes, or setting alerts and walking away. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech Spy microscope. No guarantees on price targets, but we will provide world-class over-analysis and high-quality sarcasm.